Hi everyone. So today I want to discuss with you income from house property problem. Already I have been discussing with you different problems under income from house property. So in some live classes I discussed some problems and its solutions, and here there is another question that I want to discuss with you, and here we are going to calculate income from house property of one assessee. So let out house. Let out house means house which is given on rental basis. And if any assessee is giving any house on rental basis, he gets some rent. He will receive some rent. So that is taxable actually. How to calculate income from house property of that let out house? We will discuss now. There is a format for that. Okay, this is a format for calculation of income from house property of let out house. We should record first gross annual value in the statement. Next, municipal taxes should be deducted, and we will get net annual value. Okay, and next we have to give deductions under section 24, and there are two deductions under section 24. One is standard deduction under section 24 subsection A, and next one is interest on loan under section 24 subsection B. If we deduct these two deductions from net annual value, we will get income from house property. Okay, so last we get income from house property. So for GAV calculation, GAV actually is not given in the question. We should calculate it. For calculation of GAV, there are few steps. We will discuss all the steps, and we will do the solution for one particular problem. Okay, so always this is a heading we should give for calculation of income from house property. Let us go into the discussion of one problem as well as its solution. So this is our question, students. So what actually they have given here? They have given here some details. We have to discuss all those first, then we can continue doing the solution. So what they have given here? So they mentioned clearly that on 2-4-2023, Mr. Kiran is a assessee. He is a assessee. He purchased one residential house in Bidar. Bidar is located in India. So he purchased the house for how many rupees? 27 lakhs. House cost is 27 lakhs. We are not bothered about the house purchasing price, but whether he has taken loan or not, that is very important, because interest on loan is allowed as deduction under section 24 subsection B. So here he took a loan of 18 lakhs. Actually purchasing price of the house is only 27 lakhs, but he took loan of 18 lakhs. Okay, so next from where he took the loan? From Karnataka Housing Corporation. He took the loan from Karnataka Housing Corporation. What is the interest rate? 10%. 10% is the interest rate. Okay, 10% we should calculate on 18 lakhs. Then we will get the interest on loan. Let us calculate that first. Okay, so here we will calculate in our solution box. First, understanding the question is very important, students. After that, we should take all the details what we need for calculation in solution first. Then we will calculate income from house property by drawing pro forma. Okay, so let us take the details. Here we will take first interest on loan. Interest on loan. How much percentage? You can see clearly this is 10%. On how much amount we should calculate? On 18 lakhs. Okay, so let us take here 10% on 18 lakhs. How much we will get? 18 lakhs into 10% means 10 divided by 100. So how much we will get? We will get 1,80,000. 1,80,000 is a interest on loan amount for 1 year. Okay, so this we can allow as deduction under what section? Under section 24 subsection B. Okay, so let us go to continuation of the discussion. Here if you observe the question, compute income from house property. They are asking us to calculate income from house property for the current assessment year. So our present assessment year is 2024 and 25. So we are going to calculate income from house property for that assessment year. Okay, and next, the municipality has fixed the value. So whenever municipality fixes any value for the house, that is known as municipal rental value, MRV. Okay, so how much they fixed? 1 lakh rupee. So rupees 1 lakh, you can see here, that is rupees 1 lakh. Whenever municipal value is given rupees 1 lakh and without mentioning whether it is for 1 month or for a year, okay, so they did not mention anything whether it is for per annum or for 1 month, then we have to assume that it is for 1 year. So 1 lakh is a MRV for 1 year, because in the solution MRV, FRV, ARV, SRV we should take for 1 year. Okay, so that is very important to note down. So 1 lakh is MRV for full 1 year. Let us take that. Let us take in the solution. So MRV means municipal rental value. That is how much? That is 1 lakh. Okay, and let us go to question again. And here, fair rental value. Fair rental value means that is FRV. FRV is how much? 1,05,000. So fair rental value is 1,05,000 students. And here they did not mention whether it is for 1 month or for 1 year. Then we can assume that that is for 1 year. So 1,05,000 is FRV. FRV means fair rental value. Let us take that. FRV is equal to 1,05,000. Okay, and next, let us go to question again. I am continuing the question. He has let out the house for residential purpose. So assessee has given the house on rental basis to others to stay in the house, okay, for residential purpose. That is why he is going to receive some rent. We are going to impose tax on that, and we are going to calculate income from house property. So here, during the previous year, the house was vacant for 2 months. So house was vacant for how many months? 2 months. 2 months tenant was not there. Okay, house was vacant. And this is very important, students. Whenever house is vacant for any months, in GAV calculation, in step 3, we should follow some rules and regulations. Okay, this vacancy period should be taken into account in GAV calculation in step 3. Okay, be careful whenever vacancy is given. Whenever house is vacant for any months. And 2 months house is vacant. Let us take the information here. House is vacant for how many months? For 2 months. Okay, you have to note this point, because at the time of GAV calculation we should take into account. I will show you how to deal with this house vacancy period. Let us discuss the question again. And next, during the previous year the house was vacant for 2 months. And next, he paid the following expenses. Owner, assessee pays different kinds of expenditure, but we are not bothered about all those. We must take into the account only municipal taxes and interest on loan. Okay, so municipal taxes rule is it should be paid off, then only we will allow as deduction. We will deduct from GAV. If it is not paid, if it is due, don't give us deduction from GAV. And next, interest on loan, it is allowed on due basis as deduction. Even it is due or paid, we can give it as deduction. Hope this is clear, students, for everyone. So they will give so many expenses here, but we are not bothered about that. We don't take anywhere in the calculation of income from house property. So repairs, how much? Repairs 7,000, students. We don't take it anywhere. Next, ground rent 840. We don't take that also. Next, municipal taxes 4,500. We take these municipal taxes into account and we are going to give as deduction if it is paid. Okay, they did not say anything here regarding municipal taxes, whether it is due or paid. Then we can assume that it is paid off. Remember this point, students. Whenever municipal taxes information is not given, whether it is paid or due, then we can assume that it is paid. Okay, and we can give as deduction. How much it is? 4,500. So here in this problem also they did not mention whether municipal taxes are paid or due. Then we can assume that it is paid off and we can allow as deduction. Let us take into the solution. Municipal taxes. So municipal taxes, how much? 4,500. You can see here it is 4,500. So let us take 4,500 here. Okay, and next collection charges. Collection charges 40 rupees. So do we take anywhere? No, we don't take anywhere. Okay, next, interest on loan is due but not yet paid. Already we calculated interest on loan on 18 lakhs 10% in the beginning of the solution. And what is the point that they mention here related to interest on loan? That is due but not paid. And one rule is there for interest on loan. Even if it is due, we can allow as deduction. Interest on loan is allowed as deduction on due basis also. So we can give it as deduction under section 24B. Hope this is clear for everyone. Next, actual rent received during the year 1,80,000. So actually in 1 year we have 12 months period, but 2 months house is vacant. So assessee is receiving only 1,80,000 as actual rent. For how many months he received the rent? Only for 10 months. Okay, note this point. He received rent, actual rent received, they said. Okay, so how many months rent he received? Only for 10 months. 10 months rent is 1,80,000. They did not give here ARV for 1 month. They have given that total rent received during the period is 1,80,000. So he received only for 10 months because 2 months house was vacant. Okay, so 1,80,000 rent he received. That is for 10 months only. We should take it for 1 year, students. Okay, so here let us take ARV for 10 months. ARV for 10 months is how much? Is equal to, it is 1,80,000. But we should calculate it for how many months? We should calculate it for 12 months. How to calculate that? Let us calculate that here. Okay, so for 10 months it is 1,80,000. 1,80,000 into, we need for 12 months. You can write into, okay, we need it for 12 months. No, right? 12 divided by, so 1,80,000 is for 10 months. So you can write divided by 10. So we will get how much? Let me check it. Okay, students, degree students can use calculators. You can carry calculator to the examination centers. So 1,80,000 into 12 divided by 10. We will get 2,16,000 students. 2,16,000. Okay, so 2,16,000 is what? ARV for how many months? It is for 12 months. ARV for 12 months. Okay, so that is how much here? ARV for 12 months. That is 2,16,000. ARV for 12 months. Okay, I think everyone understood this calculation. Hope this is clear, students. Okay, ARV for 12 months is how much? That is 2,16,000. So in the calculation of GAV, in the third step, ARV should be taken 2,16,000. Remember that point. Okay, and next we discussed a complete question. So we understood the question and we took what points we need to take into the account for calculation. So all that we recorded in the solution. Okay, so we recorded everything here. Let us go and do the calculation of income from house property by applying all the rules and regulations of Income Tax Act 1961. So let us go to the calculation. So this is how we do calculation of income from house property, students. First we should draw columns. Okay, so after drawing columns, then what we are going to do, we are going to give heading. This is what house? First let out house. Okay, you should write let out house on the top, and next you should give heading. What is the heading that you can give? Computation of income from house property of Mr. So name of the assessee should be recorded here in the dash. Okay, so what is the name of the assessee? You can see here name of the assessee Mr. Kiran, who is the owner of the house. Kiran, we are going to calculate house property income for Kiran. So Mr. Kiran is our assessee. Let us go and record here Mr. Kiran. Okay, he is our assessee. For the assessment year 2024 and 25. This is a heading that we are going to give, and we have to draw columns, particulars, amount. Already columns are ready and format is ready. This is a format that everyone have to follow while calculating income from house property. Okay, and here first item always is gross annual value, students. And gross annual value short form is GAV. Okay, so what is GAV? Gross annual value. Do they give in the question? No, they don't give in the question. We have to find out. How to find out then? There are 3 steps to calculate GAV. Let us go and follow the steps. Okay, so then after calculating GAV, we will record here in the amount column. Let us go to calculation of GAV. So this is how we are going to calculate gross annual value, calculation of GAV. So how many steps we are going to follow? We are going to follow in total 3 steps. Step 1, step 2 and step 3. There are 3 steps for calculation of gross annual value. Okay, first let us go to step 1. In step 1 we are going to take what? Higher of the following 2 is taken as ERV. ERV means expected rental value. In the first step we will get ERV, expected rental value. How? We have to select a higher of the 2. What are those 2 then? First one is municipal rental value. Second one is fair rental value. Okay, out of these 2 we should select highest amount. Then we can call it as expected rental value. That is nothing but ERV. Okay, so first one is what? MRV. MRV for short form is municipal rental value is the first one. Municipal rental value short form is MRV. Okay, MRV is municipal rental value. So we should take it for full 1 year. Already we have recorded that in the solution box. How much it is? 1 lakh. Let us go and take 1 lakh rupee there in the place of MRV. I will take here 1 lakh. Okay, and second one is fair rental value. Fair rental value means rent of a similar building, and the short form is FRV. Let me record here FRV. FRV is a short form of that. Okay, short form is FRV. So how much it is actually FRV, fair rental value? Fair rental value already we have taken here, that is 1,05,000. So let us take there in the place of FRV 1,05,000. Okay, so now you see and you select which one we are going to select. Highest one, higher of the following 2. Okay, so highest one we should select. What is the highest one? Highest one is what? 1 lakh or 1,05,000? It is 1,05,000. It is more. Okay, so we are going to select this. How you will select in your notes and in the examination? By drawing a circle around 1,05,000. Here I am going to change the color of that. Okay, so I will select it by changing the color. 1,05,000 I selected. So we have to name it as what? Expected rental value. Short form is ERV. So what is ERV here? 1,05,000. 1,05,000 is ERV. So in the first step we found out ERV. Let us go to step 2. Step 2 actually we are going to do step 2 only in case if standard rental value is given. If standard rental value is not given, we don't deal with the step 2. We can remove that. We can directly jump into the step 3. Okay, So now let us check whether they have given standard rental value in our present question or not. So do we have standard rental value? Did we take here? We discussed a question and we took all information here, but we don't have standard rental value in the question. So if we don't have standard rental value in the question, then step 2 is not required. Okay, after step 1 we can go to step 3. Let us go to step 3. Now I am going to delete step 2. Okay, now directly we jumped into step 3. And step 3 is what? Higher of the following two is taken as GAV. So higher of the following two we are take it as what? GAV. Okay, gross annual value. First one is adjusted ERV. Always remember in every step, previous step answer will be taken as first point. So step 3, first one adjusted ERV, that we get in second step, but we don't have second step, so this is not adjusted ERV. So for step 1 answer we are going to take, that is what? ERV. So ERV we are going to take here in the third step in the first place. Okay, so that is what ERV, expected rental value. So expected rental value, expected rental value. Expected rental value is how much? That is ERV. Okay, ERV is how much here? We selected from the previous, we selected in the previous step, that is 1,05,000. We can take it here. Okay, so 1,05,000. And actual rental value. Actual rental value means what? ARV. So ARV is, we should take it for full 1 year. Okay, so what is that? ARV for 12 months, 2,16,000. Let us take it 2,16,000 here. Sorry, 2,16,000. Okay, so we have taken expected rental value and actual rental value for 12 months. First, whenever vacancy period is given, whenever house is vacant for any months, actual rental value you take it for 12 months first. Then you select here in the third step, which is highest, that one you select. Okay, then you deduct vacancy period rent. Okay, that is what you have to follow whenever vacancy period is given and no unrealized rent in the question. Okay, so this is a problem, that is an example for there is house is vacant for a few months and no unrealized rent. Okay, so in case of unrealized rent, we did previous problems in the previous live classes. You can go through that, where we have unrealized rent, and this is a problem where we have vacancy period but no unrealized rent. House is vacant for few months but unrealized rent is not there. So in that time we have to follow this procedure. So in the third step, ARV you take for full year. Okay, but assessor received only 10 months rent because house was vacant for 2 months, but you take for full 1 year and select here first. Highest one you select. Okay, so which is highest one here? 2,16,000. You select that first. So how I am going to select? By changing the color. I selected 2,16,000, and then what you do after selecting? Okay, you selected 2,16,000. No, after selecting that, you deduct vacancy period rent. How many months the house is vacant? House is vacant for how many months, students? It is for 2 months. Okay, so you see 10 months ARV is 1,80,000. 12 months ARV is 2,16,000. Okay, so what is 2 months ARV? You can deduct. I will write here if you want. You can calculate that here. ARV for 2 months. If you want, you can calculate in 2 ways. You can deduct 1,80,000 from 2,16,000. That is one way. Otherwise, you can calculate by taking into account 1,80,000. So 1,80,000 into, you need for how many months? You need for 2 months. 2 divided by this 1,80,000 is for 10 months. No, 2 divided by 10. Okay, you will get how much? You can check. 1,80,000 into 2 divided by 10. Okay, you will get 36,000. 36,000 is vacancy period rent. Okay, so this is what we are going to deduct in the third step from the selected amount. Okay, 36,000. Let us go here and let us deduct 2,16,000 we selected. You deduct 36,000 from this, that is vacancy period rent, 2 months rent. Okay, how much you will get? You will get now 1,80,000. Okay, so this 1,80,000 is known as gross annual value. So in this way we should select students. Always follow this step whenever house is vacant and no unrealized rent. Okay, in any question vacancy period is given but unrealized rent is not there, then in the third step you should follow this procedure. Hope this is clear. Let us go to the discussion. Okay, gross annual value, how much is selected? 1,80,000. 1,80,000 is our gross annual value. Let us go to municipal taxes. Already we have taken municipal taxes here. So municipal taxes, how much students? It is 4,500. Let us go and record in the format 4,500 and deduct these municipal taxes from gross annual value. We will get some amount. How much we will get? 1,80,000 minus 4,500. You will get 1,75,500. Okay, so we can call it as what? Net annual value, NAV. Short form is NAV. Okay, this is what we get here and you should name it as net annual value and we can call it as NAV. And from NAV we are going to deduct two deductions under section 24. There are two deductions. One is standard deduction and the other one is interest on loan. Okay, so standard deduction is also called as statutory deduction. It is under section 24A. Always we give 30% on NAV. Whatever NAV we get, on that we should calculate 30%. So let us take here. Let me calculate 1,75,500 into, so 30%, 30 divided by 100. Okay, so how much we will get? Let me show that. So how much we will get here? You calculate students. 1,75,500 into 30 divided by 100. You can use calculators. We will get 52,650. Okay, I am using calculator. You also use calculators because degree students, BCom students can use it. So we will get 52,650. We can write here. So I will write here 52,650. 52,650 and let me change the font size students. Wait for a while. I will just change it because that is not accommodating here. And here okay, so 52,650 and next one is interest on loan. Interest on loan under section 24 subsection B. Okay, how much we are going to take here? Already we calculated. Okay, So 10% on 1,80,000 interest on loan, that is 10% on 18 lakh students. 18 lakhs loan he took. So total 1,80,000 interest we calculated. So let us take that and let us give as deduction here 1,80,000. 1,80,000 is a interest on loan under section 24B. Okay. So let us deduct this 1,80,000 and 52,250. What is the total of 1,80,000 and 52,650? That is 2,32,650 students. So that deduction amount is more than 1,75,500 net annual value. Net annual value is 1,75,500 and deduction amount, total two amounts are more, that is 2,32,650. So whenever that is more, we will get loss, we don't get income. Okay, so let us deduct that 2,32,650 minus 1,75,500, we will get 57,150 students. 57,150. Is it income? No, it is loss. Okay, because that is a negative amount. So we have to call it as what? Loss. Loss from house property. That is the answer that we get here. Hope this is clear for everyone. Okay, so this is how we are going to calculate income from house property of Mr. Kiran for the current assessment year, that is 2024 and 25. Okay, hope this is clear for everyone. So this is how you have to calculate. Here in this problem, what is the main point that we have to focus? No unrealized rent, but house is vacant. Okay, so if house is vacant for any months, in calculation of GAV, in the step 3, ARV should be taken for 12 months. Then you select highest one in the third step. Then after selection, you deduct vacancy period rent from the selected one. Then you will get the gross annual value. Hope this is clear for everyone. Let me show full solution what I did today. Okay, so that you will have an idea. So we discussed a let out house, and here what we focused on a point, that is there is no unrealized rent and vacancy period is there. Okay, this is our question, students. I will show that. Okay, so this is our question, full question, and this is question. This is a solution. We have taken all points from the question what actually we require into the solution box. Solution starts from here onwards. And next, this is a calculation of GAV and calculation of income from house property, but here we did not get income in this problem. We calculated loss from house property, because at the end answer is negative. NAV is less than deductions, so we have to deduct it, but the amount whatever we get, that is not income, that is loss from house property. Whenever assessee gets loss, there is no tax on that. Next, this is a calculation of GAV. We took only step 1 and step 3. Step 2 is not required because there is no standard rent in this question. But step 3 is very important here, because there is vacant, house is vacant for 2 months. Okay, in the step 3, first take both for full 1 year and then select the highest one, and from the selected one you have to deduct vacant rent. Okay, so for how many months house is vacant, that many months rent you should deduct. Then whatever you get, that is known as gross annual value. Hope this is clear, students. So if you understand the solution, like the video, share it so that it will be useful for other students. Subscribe the channel. Thank you.